Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. Okay, so look, we talked about it holding the 9-day yesterday. They went and made a higher high, trading up 32.26 and change. They knocked it right back down. And I sit here and I turn this thing on. The 9-day is 31.46. We're literally trading there now. So it was a nice run up in the morning. It was choppy during lunch, which you would expect. And then they went ahead and did the higher high. When it reversed, and it broke some key areas there between 16 to 18 yesterday, turned into a really nice short. Really nice short. Nicer than I thought it was going to be. I didn't think that we'd be doing 50 handle runners, on the back end of that lunch chop. But look, it's the same thing that we've always seen. Once the tape gets going to the downside, the Bears have a chance to blow off some steam. It's profit taking. They run it back in. Where the Bears struggle is what's happening now. So we're basically where we were when we closed last night. The Bears have demonstrated an inability to take out the 40 area and to seal off the weekly pivot. Let's go to the hourly chart. So we talked about a test of the weekly pivot early in the week yesterday. We were trading up here. Now we're right here. Here we are. 9-day weekly pivot. We've been sitting around here now for a while. The hourly mid-band is trying to hold in price. That's fine. But what you're going to need to see is a conversion of yesterday's low. They traded on the reaction down. It traded down as low as 40.75. That area needs to convert. Needs to convert to resistance. If it's able to do so, then you have room to go down and test that daily mid-band. So what do the Bears get for going from 32.26 to the daily mid-band? Nothing. Nothing. Upper band, middle band. That's what it's supposed to do. If the Bears want sustainable downside, they need to convert the middle band and start living between the middle band and the lower band. So a move from here down to the daily mid-band is no victory for the Bears. It starts the actual battle over whether the Bears can turn this into a sell rallies tape. Okay? What we've seen more recently is when we start moving down towards these areas, they defend them, they walk them right back up. So when I see things like this, I get a little concerned that 40 isn't going anywhere. And if that's the case, then we need to be concerned when we're short, if that hourly mid-band and that weekly pivot goes support, then we need to start finding ways into the long side of the market. Bottom line. Expect the market to do what it's been doing. Not expect the market to change its tone all of a sudden. The contrarian stuff in tapes like this will get you into trouble. Okay? So it was an interesting day yesterday. You basically had a trend up morning, choppy midday, and then a trend down afternoon. Great for trading. Fantastic trading. Great way to start the week. So as we head into the open today, everything on this 5-minute chart that I have is basically consolidated between 55 and 62. Volume weighted average price comes in at 55. Weekly pivot 56.25. 5-minute mid-band 57. Proprietary moving average 58. Hourly mid-band 62 and change. So 55 to 62, 55 to 58 is really where the rubber meets the road. That's the area that they converted right around 8:30 that allowed this push down to the 44 to 46 area. So we got to keep an eye on all that. All right. Everybody have a great day. Be safe, be healthy, take care, trade them well. I'll talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.